right, welcome everybody to Wall Street Reporter's next Super Stock live stream, where we bring you those stocks which have that 10x to 100x upside potential. Companies going after massive multi-billion-dollar market opportunities that are at a key inflection point with multiple catalysts in place, and that brings us to our latest next super stock, which is LTRY.com. Matthew, welcome back to the program.
Thanks for having me on again, Jax. Pleasure to be here.
Absolutely. So I know you're traveling. You're in LA at the moment. We're gonna talk about what brings you to LA, which is very interesting. But I think the backdrop is LTRY's M&A strategy, which I want to get into in a big way, and I guess that's one of the reasons you're in LA. For anybody that's new to the program, can you start off with maybe just a quick snapshot of LTRY's business model? What your company does.
Sure. So LTRY.com, as we know, listed on NASDAQ under LTRY, has been listed for a good few years now. And as we spoke about, you and I, when you kindly had me on before, first of all, the strategy was to turn the company around and deal with some of the outstanding issues and build out a new business model for LTRY.com and Sports.com. And they're two new business models that myself and the team have been working on for a couple of years. If you take the overall strategy, you've mentioned buy and build. You're right, that is very much part of our business model moving forward. But LTRY is essentially a tech company, it's a gaming company. Initially, it was reselling of lottery tickets in and around the domestic markets in the US, and working with sweepstakes and looking at other models that before the company effectively collapsed back in 2022, was looking at other gaming strategies. And what we've done really is picked up where they've left off, helped develop the tech, and now ready to relaunch domestically, but taking the brand and expanding that brand and really capitalize and leveraging the brand LTRY.com, and looking at the whole market globally. And LTRY.com's, as we talked about before, is a wonderful brand, and we want to make sure that we build out a marketplace that everybody that's involved in lotteries, doesn't matter what country, we can potentially work together using our new platform.
Yeah, and so so the lottery market, we mentioned before, it's a $350 billion global market opportunity. So you're basically leading the digital transformation of the space, which is again massive market opportunity. We'll kind of go into updates over there, and then of course you have the other brands which are extremely valuable. You got Sports.com, you're picking up concerts. Let's talk about those, and I guess we'll segue into what bring the whole the M&A strategy around the sports. But
sure. So yes, you're right, and Sports.com is, I mean, where do we start? It's such a fantastic brand, but essentially we split the business model, we split down into two verticals, and that's Sports.com Media and Sports.com Verticals. Sports.com Media, we're really looking at new ways of integrating new users, using fully immersive technology, live streaming, taking events that ordinarily you wouldn't be able to find on conventional TV, and live streaming those events to your device anywhere in the world. And to support that media strategy, we are aggressively looking at a buy and build strategy. So we have a pipeline of acquisitions that support the brand Sports.com and to a degree LTRY.com, in order to really promote that brand globally.
Okay, and it's kind of interesting because your M&A strategy reminds me of, it's very similar to actually the whole company. It's kind of a combination of, last time you were on, we mentioned IAC, Interactive Corp, which obviously is became a major stock. They own, I think people don't know, they own what is it? They own, I don't know what they own most of the major .com brands, ranging from Expedia, Match Group. They had was it Angie's? They have a whole bunch of these internet businesses, but it was all through an M&A strategy, right? Because originally they started with, the company's original business was like a TV, basically home shopping, right? And then all of a sudden they did these acquisitions in M&A in the .com space, and it became wildly successful. The stock went up like literally, I don't know if it was 100x, but it was maybe a couple of 100x. So people did very well with that, and also TKO, which I think is you're more closely, more similar to, TKO. For anybody that doesn't know, is the parent company of the UFC, the Ultimate Fighting Championship. In case anybody doesn't know what the UFC is, you get the UFC, also wrestling, the WWE. I think they own IMG, which is the the global sports agency, and they have a couple of other sports related businesses in there, and they're developing other different sports. And it seems to me like you're doing something similar with under the sports.com umbrella. Is that right?
Well, that's very flattering of you to compare us to companies like that. But you're right. And you can look at Liberty or Live Nation, companies that are in that sphere. And I think that what they all have in common is they're looking at several aspects of entertainment. Where you have sport, you have music. Where you have music, you have fashion. Where you have sport, music, and fashion, normally there's gaming. And I think that what we've been looking at over the last 2 years is to build a business model that, of course, complements the wonderful brands of lottery.com and sports.com, and now, as we spoke before, about concerts.com. But our model is different, similar but different, in as much that what we're trying to do is build an entire ecosystem where it covers those 4 verticals. And that's what I'm really excited about as we roll out this business model over the next couple of years. And again, Jack, you're absolutely right. In order to do that, you have to pick strategic businesses that complements one of those verticals. And I know I would say this, I'm sitting on the other side of the desk. We've achieved that, and the next 12-24 months is all about rolling that out and how we build this, pull this wonderful business together under Topco Lottery.com.
Okay, no, it's very interesting because the it's evolving. Like right now, it seems to me like you have a bunch of different pieces in place, and the market. My take on it is that the market doesn't quite understand the big picture. That's why the stock is $1 and change versus potentially $5, right? Because you have these different parts, and they haven't seen that the market hasn't kind of seen where you're taking it, where they're all going to come together, where the synergy is going to be, which might be, again, could be over the next 6 months, 12 months. For example, like you have this, you announced this acquisition of Nook. If you can tell us about that and how that fits in, because maybe again, that's one. It's a deal you announced last week, and it seems like the stock didn't really move that much on that news, which to me says the market doesn't understand the deal, or they don't understand what the deal means for the company. So if you can tell us about Nook, and how that's going to drive the upside potential for lottery.com.
Well, thanks for giving me the chance then to come on and explain. But I think you're right. I mean, lottery.com has gone through an awful lot over the last few years, and it would be only natural for shareholders to feel a little confused as to, well, where's the business model? Because only a year ago it looked like lottery.com wasn't doing anything whilst behind the scenes. I mean, it's like looking at a beautiful swan and underneath the legs are going mad. We're restructuring and rebuilding the business, changing the management, changing the entire business plan, getting the company refinanced, getting it compliant with NASDAQ and the SEC. I mean, it's a hell of a journey, and of course a lot of times shareholders and new investors don't see what's going on behind the curtain, and so it's opportunities like this that really gives the company the chance to explain, or at least share the shape of what the business looks like over the next couple of years. And I think you've done my job for me. You've done a very good job putting out some real life examples that we can compare to. So look, back to the question that you asked, which was Nook, and how does that fit in? Because ordinarily from the outside, you might say, well, it's a business in the Middle East, and it's a shared office space. What does that mean? But it is in fact, it was our first acquisition that I identified in Dubai a couple of years ago. I'm excited about it. The company's excited about it. I think our shareholders will be excited about it, because it really is an incubator. It was the first business in the Middle East, or first business, sorry, in Dubai, in the UAE, where you were allowed to work multiple businesses under one roof, a bit like WeWorks, but the difference is with this business is you can land in Dubai as a new start sports company. Let's say, for example, I don't know, Keep Fitness, yoga teachers or something along those lines, land in Dubai, need a bank account, need a license, where they're going to work, what office, how they're going to meet people, etc. And what I identified was this is precisely what Nook does. You can land in Dubai airport, you can go straight to the Nook offices, you can get yourself a desk, you can get yourself a license, you get an already tailor-made group of people, like-minded people that are in the same business. It is for specifically for startups in sports. So just think of it as like one big incubator in this incredible city, I suppose comparable to Vegas, that is built out of nowhere and now is just one of the strongest economies in the Middle East. And we're front and center of that. And so the idea is when we close on it, then which we'll announce soon, we'll rebrand it. And then it should be able to roll out. You'll be able to sort of emanate that business in other markets in the Middle East. But I honestly believe it's an international business. You can roll it out in many other countries. And of course, wouldn't it be lovely if we could identify somewhere in the US and bring that model to the US? And look, although this specific business, 1JLT, doesn't include a huge leisure center with fantastic extreme activities from wall climbing to padel to indoor tennis, golf simulators, etc. The next one that we do will. So what we're going to try and do is you pull this whole work, rest and play model together, where you can be at your desk and at the same time you've got this incredible complex arena around you, and that's what we're really looking forward to.
And what kind of revenues is Nook generating right now? And
well, it's still quite young, so it's only a few years old, and it started in COVID, but it's already generating a good amount of cash. And it's highly profitable, but it's only running at about 50 or 60% capacity. So by sports.com coming in and our team to help develop the business, I think that we're forecasting double the profits as to where it is now within the next 12 months.
Okay.
And the next one that we do will be even bigger. So it's modular. The bigger you make it, the more cash you generate. So the nice thing about this business, and when I said to you 10-15 minutes ago, it's strategic. The businesses that we're looking at do two things: expand the brand, of course, that's vital. The bigger the brand becomes, the healthier shareholders' value becomes, but they generate cash. And that's something that the business has been lacking until this new team of people came in and took over.
Okay, but Nook, so the numbers on Nook, I think you mentioned they're doing, is it a couple million in revenues? Like what kind of numbers?
That's right. In AED. So $500,000 or $600,000, I think, is the forecast for last year, and similar for this year. Okay.
Oh, is it dollars or the local currency?
Local currency is, say, 2 to 2.5 million dirhams. I'm not totally familiar on the exact conversion. $500,000 or $600,000 currently.
Okay. And then so the idea is to basically to build up that brand, to scale it, potentially worldwide, etc. And again, it ties in with your other kind of, I guess, sports, wellness related businesses, if you will. Now what about I think, okay, so what brings you to LA? You want to share with our audience what
I'm just a sucker for Beverly Hills.
Weather now.
It's a wonderful day here today. Look, I'm sure some of your viewers, listeners will know it's the start of the FIFA Club World Cup, and so I'm here with a couple of the other ambassadors, Mr. Dennis Wise and Mark Bircham, and we were at the PSG match yesterday at the Rose Bowl, just up the road with FIFA. And I'm here for another couple of days before we head back to London. And really looking at opportunities, I think we've made clear that part of our strategy with sports.com under lottery.com is to get involved with a specific type of football club in the UK. And this is where all the great and the good are congregating over the next few days. So we're having conversations. And of course, the 2026 World Cup, FIFA World Cup, starts in June next year. I'm sure some people won't agree with me, but I think it's factual the biggest sporting event in the world. So, and it's been hosted in the US. Right.
No, that's it's not that big in the, I guess in the US, the football, soccer, football it's not a big deal, but the rest of the world is obviously huge.
Jack, it's growing so fast. Look at your brands. Look at things like Inter Miami or what Messi.
Right. Well, Trump has a big. He's got that big gold FIFA statue or prize in his office.
And he had and the head of FIFA was at the White House last week, Gianni. And then look at your story of Wrexham and Ryan Reynolds. I mean, look, I've been coming to the States since I was a little boy in '75, and I would agree with you up to sort of 10 years ago. But I think when Mr. Beckham came to the US and started playing for LA Galaxy, it's shifting. I mean, soccer is just growing so fast, as is women's soccer. Huge.
Sure. Oh no, I think it's very big. Now it's interesting. Before we began the live stream, I think we were talking about the Wrexham, the Wrexham club, which is with Ryan Reynolds, and again, so basically, so lottery.com under the sports.com umbrella is you're looking to buy a sort of an English football team, right? That's the goal.
I mean, look, we would consider any club that we feel fits with both of our brands, lottery.com and sports.com. Remember what we spoke about before. It's strategic. And so there is a criteria that this club would have to meet. And that would fit with the lottery brand, fit with the sports brand, would allow us to work with those three brands, whatever the football brand is, and make it into an international brand. We know this can be done. Look at what Beckham has done with Inter Miami alongside players like Messi, but look at the value of that brand now compared to where it was a few years ago. But probably in an even better example, as you just mentioned, is Wrexham. And I don't know whether you know where Wrexham is, but I'm not even sure I've been there. But it's a small mining community in the back end of Wales. I can't remember the exact numbers, but there's a fantastic documentary that the guys put together when they bought that club. But I think out of COVID, they paid $5 million. And then I was reading in the New York Post, I think this weekend, and I know it's football crazy at the moment because of the Club World Cups just started, etc., and the World Cup next year. But there was numbers of like 300 million being bantered around now for Wrexham. I mean, it is a fairy tale story, but it was beautifully told. And it's a very good model.
So there's basically these football clubs. They have big upside potential, right? So this Wrexham club with Ryan Reynolds, they took it from, let's call it 5 million to 300. Even if it was 100 million in 2 years, that's a big increase in, what is it, 3 years, whatever the period of time is.
The most active buyers in the UK now of football clubs are Americans because they see the value, and because the value of your clubs, NFL, NBA, etc., Indy, NASDAQ, I mean, it's just so astronomical that the entry level is much less, and outside the US, the brand value is so much higher because these teams become international brands like Wrexham and like Miami. So yeah, look, we're talking about football, and I could speak about it all day, but it is just one vertical that we're looking at that would help expand lottery and sports as brands. But you'll see that we've been very active in the US motorsport space. We've been sponsoring 3 wonderful drivers in IndyCar and Indy NXT over the last 3 or 4 weeks. All 3 were driving this weekend. 2 of them were in the Indy 500 2 weekends ago. It's a great way of just getting the brand out there before we start announcing a lot of these acquisitions that we've identified.
Okay, yeah, because that's one of the things I wanted to ask about, is because I think a lot of investors, in the market, they may have been confused. Okay, why is the company, doing all these sponsorships, so early on, it's not generating any, real revenues yet, right? So the idea is to, kind of build the brand, and the pieces basically are going to be falling into place over the coming, months and quarters.
Success breeds success, doesn't it? And as you and I have spoken about before, think big. Lottery.com, sports.com, I don't think you get much bigger at brands. You've got to do them justice, haven't you? And for me, the aggressive buy and build strategy is the perfect strategy for 2 brands, utilizing and maximizing the vehicle that we've got on NASDAQ, build brand awareness, identify businesses that fit with those brands and generate cash. It's a winner.
Yeah, I think, it's quite interesting, because it really, you are doing this kind of combination, this business model of IAC and TKO, where you have these different media brands, sports, businesses, like they have, World Wrestling, they have the UFC and all that. You put them under what, I mean, there's a lot of synergies, and there's obviously, acquisitions out there. So you're looking at right now, so you got Nook, right? So what's, you're actively looking for a specific type of football club, whether it's in the UK or elsewhere. But what are we talking about in terms of dollars, or what are the economics of the potentially the deal? Like how big of a deal would you be able to do? Like is there a limit?
Well,
what do they sell for?
There's always a limit, isn't there? But and cash permitting, but. I think it's now common knowledge that we have put in some pretty hefty drawdown facilities to the tune of right now 250 million. And as I said to you in the last interview, look, we're not using those funds per se to run the company. It's to buy and build the company and get those brands out there. So we have to remember those 4 verticals that I think that sit in the ecosystem: sports, music, fashion, and gaming. And if you could find one company, and you haven't mentioned one yet, because I'm not so sure that there is one. I think 1 or 2 that you've mentioned, maybe Live Nation, maybe Liberty, have 2 or 3 of them pretty well sorted, but not all 4. And so the answer to your question is that we are looking at acquisitions that complement those 4 verticals. And if you look over the last 2 or 3 months, and you just read between the lines, if you look at the sponsorship deals that we've done, if you look at the acquisitions, we've mentioned Nook, don't forget concerts.com.
Concerts, that's a big one. Yeah.
You can almost map it out. I think that there needs to be a few other press releases that will help, but I think the picture will come together nicely over the coming weeks.
Yeah, interesting. Earlier you mentioned that you're talking about the swan metaphor of the swan. Above it looks very graceful, underneath the feet are, but kind of. I think in a way, lottery.com is kind of like the story of what is it, the ugly duckling, right? Which transforms into the beautiful swan. I mean, the swan is always there, but early on, people are still seeing the lottery as where the company was, let's call it 18 months ago, right? So where it was going through the whole, all the drama, which you're still dealing with, some of
absolutely
the leftovers.
Some horrible stories out there, and we could have had a whole session just talking about those stories. I'm so pleased, Jack, that you're one of the first interviewers that I've got to know that you're more interested in the future, because clearly you have great followers, and that's it's just a delight to actually start talking about the future and not the past, because it's been it's been hard on everybody the last couple of years to get this thing turned around. And I don't mind saying to you, on occasion, I was questioning whether it was possible. Is a lot of toxicity around it, and I think that if you're using your analogy, or mine and yours mixed together, I think you're right. The ugly swan's turning into a beautiful swan, and the legs that were doing this are slowing down now and doing a very nice breaststroke.
Yeah, no, it's very interesting. Okay, so I think basically, or it's, what is it? It's the I guess we're trying to figure out the right metaphor to use for this, but maybe it's like the different pixels. You see a bunch of pixels, but as you move away, then it all comes into focus. Like right now, the acquisition, the M&A strategy, people see different pixels, but only when they move back, then everything comes into focus and they see the whole picture. So I think that's gonna happen over the next probably how long will that take? Because I think it's very important. How long do you think it'll be before the market all starts to understand where you're going with this? Is it going to be?
Well, I hope it continues to the day I retire. That there's no date on when suddenly we say, well, enough's enough. No more.
No. I mean, when will the market figure it out? Because in others, I think you need.
I think imminently, Jack.
Okay.
And I think just by having this type of one-on-one session, I think it gives us the opportunity to explain what direction we're moving in, but quite literally every day, every other day, there'll be more news that will help piece this whole jigsaw together, and I think it makes one very compelling painting.
Okay, yeah, I think basically if you have, I think what the market is probably waiting for it is, I mean, that signal that everything is working will be when you pick up an acquisition, which is going to be, more of a, like that game changer, something which is doing some significant revenues. And that's like kind of like a big, I don't know, I'm trying to figure the right thing. Let's say it's the football club or whatever it is, but that's going to be like, I think at that point, people will say, okay, we get it. Because right now the market doesn't really understand. That's why there's an opportunity in the stock. The opportunity is only there when people don't quite understand it. Once everybody understands it, then the value is already baked in. Everything, look,
there would be no point, would there, to go out and raise the level of financing that we have to just do a few sponsorship deals and an M&A like Nook, for example, which is, don't get me wrong, it's a fantastic acquisition, but it's not on the levels I think that you're alluding to. And one would have to ask, well, why have they got these facilities in place? Well, I can tell you it's not to run the business, because the business will run the business. Lottery.com generates cash, sports.com will generate cash.
Sure.
We've always knows generates cash. So it's there for specific acquisitions.
And I think maybe we should clarify, because I think there's been also some confusion in the market. Okay, so you have these financing facilities in place for potentially a couple $100 million, or whatever it is. But that only, I mean, you can only draw that down if you really have some substantial acquisition or something which moves the stock. It's not like you're going to be diluting the stock right now, where you're going to be, because you can't get it. There's no way that you can get even $10 million like this week, unless you have something. There's got to be some fundamental shift in the business. So I think, for example, let's say you announce maybe an LOI with, let's just use an example of the I'm going to use the example of the football club, right? So let's say it's a, I don't know, $25 million deal, or I don't know, how much do these things go for? Like, they're not.
Well, we just mentioned Wrexham was 5 million, but let's say your ballpark's, let's say between 20, 50 million, something along those lines. That's probably a good analogy to use.
Okay. Yeah. So let's say you announce that. Very likely the stock is going to jump on that news, and your company is going to be valued based on owning that club. So then you'll be able to raise. It's kind of like a chicken and the egg thing. But I think when you have that deal announced, the stock will move, and then you'll be able to draw down on that financing. So I think that's
and you remember when we spoke a few weeks ago, we talked about bloating and trim the fat. We're a lean, mean machine now, and The model, as we said, is modular. So you bolt on businesses that help expand the brand and generate cash. Doesn't put any more pressure on Topco, head office expenses. So we've trimmed the fat right down. So we are very lean. It depends on of course, these acquisitions. Some will be self-funding. Some you'd use other type of structuring if there are property or assets involved, for example. But the important thing is that whatever acquisition that we bring in, it has to be an acquisition that really raises the value of the brand and shareholder value. So that would go back to what you were discussing. Well, one would then think automatically that would give you a much stronger share price, which we know when you have a stronger share price opens up all sorts of different doors in terms of allowing acquisitions to go forward. And of course, generate their own cash. If you can get those two things right, with 2 brands, 3 brands now like this on the NASDAQ exchange, it's a winning formula. But it is important, as we talked about before, that, and we're very fortunate to have been able to come in and cut the bloating, trim the fat, get the company structured as we want, ready now with some clean financing to go forward and enjoy the business model over the next few years.
And I think it's important also to note the really the kind of the intrinsic value. I think the market, the investors need to understand the intrinsic value of lottery.com. I think the first time we did the live stream, the thing that I really wanted to bring up was that the domains that you own, I mean, these are like world-class domains. We've seen domains sell for, upwards of $100 million, right? Like some top-level domains get massive money, right? So something like a lottery.com or sports.com. For example, sports.com, and I think I did a video where I kind of outlined, like, can sports.com by itself be worth, I don't know, 30 million plus? Yeah, it can. I mean, actually, what's the market cap of? The market cap right now. I don't even know what the market cap of the lottery right now is. What, it's 25 million, roughly 20 million.
30. I think it's 30. You cut out actually there, but did you ask me what the market cap was?
Yeah. Right now, what are we at?
33 million.
We're about 30. Okay, yeah. So actually, yeah, we're under, just around 30. Yeah, 30 million right now. Yeah. So, but hang on. So I think we lost. There we go. Can you hear me?
Yeah, I can hear you.
Okay, I thought maybe the internet may have dropped, but just the domain like sports.com, I think. I did a video where I explained, that could be by itself worth, 30 million plus. I think you mentioned you've had offers for that domain of something like that.
Look, both the domains attract a lot of attention, and we could spend all week just dealing with offers that come in for sports.com. It's arguably up there as one of the best domains in the world, and a lot of the offers are just not credible. But don't get me wrong, we have had to look at some of these offers that have come in, and by and large, most of them haven't met the criteria that would allow us to really go forward with any of those. And I think from the company's point of view, we've built out such a great model that it would be difficult for whatever offer came in to compete with where we see the business going over the next few years. I think 6 months, a year ago, we would possibly have had to consider some of those offers more seriously, but there have been offers well in excess of the numbers you're talking about. And I think that the important thing is, where it's very difficult to put a value on them, is if you put all 3 together, like that stall we discussed before. So if you put concerts, sports and lottery together, what value then do you put on them? My view is it's academic, because when you build out the business model with the 3 in that ecosystem that we've discussed, it won't come close, or whatever value or bid you get for those 3 domains, because I think the business is going to be in a completely different level in a year or 2.
Yeah, no, I mean, I think it's fair to say that, the two, just between lottery and sports.com, because, well, actually concerts also, I mean, that could be certainly north of 60 or 100 million when you combine those brands. and you have a business there, because I mean those are like, again, those top level domains, and there's a reason why these things could sell for 50, 25, 50, 100 million for the right one.
Yeah, and as I said, it's a good test. Try and think of another business that has sport, has a music-related domain, gaming domain. I mean, the only thing that we're missing there, arguably, is fashion. But I strongly believe that building a ecosystem where you've got those four verticals all integrated, that really is something special.
In concerts.com, so that's a domain which that business you are that. Do you own it now, or that's expected to close soon?
LOI signed, and we are hoping to announce imminently the closure of that deal, and maybe by the time we speak next, that would have progressed.
And
but it's looking, it's in great shape.
Okay, and that would essentially be like what, allow you to build like a transactional e-commerce business, like a Ticketmaster or one of these type of things?
Absolutely. I mean, it opens the door to so many different opportunities to support both lottery.com and sports.com. The three will work together in tandem. Okay.
Yeah, no, very interesting. Okay, so it looks like there's a lot of moving parts, a lot of activity. What can we expect from lottery.com over the next let's just say 30 days? What kind of news flow? What kind of milestones?
Well, it's fluid, and what can I say? I can say to you that, look, it's fluid, and there are going to be plenty of announcements over the next 30 days, 60 and 90 days. To the end of the year, there's going to be some great announcements, but I think the significant ones are in the next 30 to 60 days. As you know, we discussed right at the beginning, lottery domestic, getting it operational is key. And I know the team are working flat out to get that announced. And of course, we've got Lottery International, which is a whole new model, which is very exciting, which I'm hoping we will be able to announce at similar times.
So the business, so this month, we actually will see the actual business of lottery, the operations commence, really, or really get off the ground in a meaningful way.
Yeah, I would say this, that because it's not just one part that goes operational, because I think we discussed this before. We've already run a sweepstakes test with the Miami Grand Prix back at the end of May, which went well. So we know parts of the systems are working. What we haven't perfected but are testing is the tech that goes with lottery.com, and that's the tech that allows you to buy gaming lottery tickets using your device. So that is right now being extensively tested. I can't give you a definitive time when that will be ready to release, because there's all sorts of different modules need to be bolted onto that from payment systems and so on, and we're in discussions with several different payment platforms, etc. So but I think that lottery.com operational within the next 30, 60 days absolutely is on the cards. It's just in what guise and what section of lottery.com that we'll announce first.
Okay.
What I can say to you is before the end of the year in 2025, we will be operational domestically, and we will be operating in a number of states.
Okay, so all right, so basically, so this is I mean 2025, I guess, is being seen as kind of that's the transitional year, or the transformational year, where everything starts coming together, which we're over the next 6 months, I think it would be fair to say that this is where the company really starts coming into focus. And again, this is the opportunity for investors to get in kind of at the ground floor, before everybody kind of figures it out, which obviously the valuation is completely different by that point. As we always see. Okay, so bottom line is we should get lottery operations over the next, let's call it 30 to 60 days. We should definitely have some steady news flow of the different aspects of the company, M&A activity, things like that. Is that right? Next.
Absolutely. Yeah, well summed up.
Okay. Okay, so I guess this Matthew, I want to thank you for coming on the program. and look forward to having you back as soon as there's the next big news event.
I always enjoy coming on, Jack. So thanks, and thanks for not being too hard. I mean, the questions weren't as tough as last time, but so I enjoyed it. Thanks very much.
Thank you again, Matthew. Thank you everybody for joining. We'll see you all on the next one.